I, Uday Malhotra,
and I, Sanjana Malik,
welcome all esteemed guests, distinguished speakers, corporate delegates, faculty members, and dear friends to the 9th National Finance Conclave of KIIT School of Management, Kalinga Institute of Industrial Technology. The theme of this edition of Conclave is Future of Work, with a focus on how technical advancements are shaping the future of financial sector.
In this part of the temple city Bhubaneswar, we have two adjoining world-class deemed to be universities, Kalinga Institute of Industrial Technology and Kalinga Institute of Social Sciences. These were founded by Professor Dr. Achyuta Samanta, a visionary leader, philanthropist, a social entrepreneur who has single-handedly ushered in an educational and social revolution on the strength of his ethical values. Dr. Samanta set up Kalinga Institute of Industrial Technology as an industrial training center in 1992, with just 12 trainees and 2 faculty members. KIIT has now grown to be one of India's largest universities, having 23 schools in 100+ disciplines, with 27,000 students across 45 nationalities, imparting globally recognized bachelor's, master's, and doctoral degree programs through professional learning. Its commitment to teaching excellence led to the grant of deemed university status by the Ministry of HRD, Government of India in 2004, within just 7 years of its inception. KIIT is accredited with Grade A by NAC of University Grants Commission. It has also been ranked 8th in the QS World University Rankings, beating many reputed private institutions in India and abroad.
The progress of KIIT was matched by the progress of Kalinga Institute of Social Sciences. Dr. Samanta envisioned education for the downtrodden. Kalinga Institute of Social Sciences has become first exclusive tribal university in the world, where 27,000 students from indigenous tribes of Odisha are provided free education from kindergarten to post-graduation. Dr. Samanta has already established KISS Delhi and started working to establish 12 branches of KISS in different districts of Odisha. With the huge contributions in the field of education, health, art, culture, literature, rural development, social service, spiritualism, his journey in life is not only an awe-inspiring but a soul-awakening for millions of youth all over the globe.
For his contributions, Dr. Samanta has conferred with various awards from different universities across the globe, including 33 honoris causa doctorate awards, Gusi Peace Prize International, the highest civilian award from Bahrain, besides over 50 national and international and over 200 state honors and accolades. KIIT School of Management started in 1993 and has 25 years legacy of providing industry-focused management education, with a vision to make it a trend-setting center for business education, where young minds are provided the right balance of classroom learning and practical exposure to turn into successful professionals and inspiring leaders. Its 30th rank in the NIRF Ministry of HRD is a testimony to that. Spread over an area of 35 acres, the institution houses more than 1,000 students across 3 courses, BBA, MBA, and doctoral programs in management.
I request Professor Anil Bajpai, Director, KIIT School of Management, to lead the guests onto the dais for lighting the inaugural lamp. I request Professor Anil Bajpai to welcome the guests and kindly set the context of the conclave. Sir, please.
Thank you, Uday. A very good morning to everyone present here. It is indeed an honor and a pleasure to welcome the distinguished guests from all over the country from various walks of life in the area of finance and economics. Subhashish Gangopadhyay, I think I will refer to him as Ganguly hereafter because it makes the same meaning. He is a research director from India Development Foundation. Gopal Raman Padmanabhan, Chairman, Bank of India after a long stint with the RBI. Chandravikram Prahladka, a name which is quite a tongue twister. CEO for Devyani International in the vertical of airports and various other food areas. Amit Singh is the Executive Director for Avendus Capital. Deepa Rath, she is the Business Head for Invoicement. Samir Mohanty, he heads the operations of Afans Financial Services. Upendra Patro is the CFO for SR Oilfield Services India. Sambit Mohanty is the country head for South Asia at Actuity. Satya Mahapatra is the Senior Vice President Analytics and Financial Risk at Barclays. Ravi Bhatia, short for Ravindra Bhatia, is the Vice President Finance and Supply Chain for DXC Technology. And Vikas Chadda finally, who is the Executive Director and CFO for the Berggruen Hotels, tongue twister by itself. My faculty colleagues, guests, and the founders, lovable KIITians. On behalf of the founder of KIIT and KISS, Dr. Achyuta Samanta, and my personal behalf, I welcome all of you to the 9th National Finance Conclave at the KIIT School of Management. While it has been mentioned many a time, at the cost of sounding repetitive, it makes sense for me to relive for a few minutes the journey that has brought us here. Dr. Samanta started this activity, this revolution of sorts, with 5,000 rupees in his pocket. And today, as you can see, we are spread almost 500 acres. We have 27,000 students. We have 23 campuses. We have a huge amount of students passing out and alumni base which is immense. And why all this? This is because of the zeal, the fervor, and the passion of one diminutive gentleman called Dr. Achyuta Samanta. He has sent a message which is enclosed at the folder of all the guests here, wishing the best for this conclave, and I'm sure we shall live up to his expectations. Now for the particular conclave, future of work. Future of work transforming financial areas. There was a huge debate going on yesterday when we were at the pre-conclave dinner, whether there is any transformation happening, whether it is a matter of just evolution that is natural and will take place, or is it something more disruptive than all this? I shall leave it to the panels to come and debate and discuss and enlighten all of us as to what it really is. We have some very distinguished speakers who will deliver their keynote addresses. We have panelists who are going to debate and discuss on areas which will encompass all this. But let me for a moment to bring my dear students on the same page. We are talking of three elements in the entire supply chain. One element is these gentlemen sitting in the first row, that is the industry, the people who are going to need talent. The second element is all of you who are sitting in the third row and before. And finally, the process that is undergoing transformation, disruption, and whatever else. So these three elements in the area of finance, in the area of financial management, in the area of financial technology, what is popularly known as fintech today, we see a lot of things happening. We see banks going bust. We see Paytm coming up of age and suddenly everybody is using plastic money. We see today's newspaper, and this is something which was mentioned in the discussion a little while ago. Today's newspaper, all of you who have read the Times of India, the front page says, Sweden is opting for a slower move towards cashless economy. They're saying, get ready to accept before you actually demolish the paper currency. So two very varied thoughts, variant from one another. And I must say that our Prime Minister in the last 5 years has actually embarked upon financial reforms in the country which will hold in very good stead for the rest of the times to come. Cashless economy in India, it may take a long time. But is it a good beginning? Debatable, and we shall hear more of it over the day. He joked somewhere, the Prime Minister was in Singapore, I think, and this is something which is told to me by my good colleague Praveen over here, saying that he was joking somewhere, and in a conference he said, the moment you mention artificial intelligence as part of your company's agenda, your valuation goes up by 10%. And if you go one step ahead and you say machine learning, it goes up by another 10%. And if by some chance you manage to mention blockchain, then you hit the roof. Then you've just gone through the roof. So when we're talking about cryptocurrencies, we're talking about blockchain, we're talking about artificial intelligence, we're talking about machine learning, can my students be far behind? No, I assure you, gentlemen in the first row, we are up to it. We are training our people, training our students in these areas to face the challenges of the future of work, as we put it. Without coming in the way of you and the enlightened speakers who will give us a lot more information and knowledge on these subjects, I once again welcome you to this conclave, and thank you very much.
Thank you, sir. Our first keynote speaker is Mr. Gopala Raman Padmanabhan, Chairman, Bank of India, a stalwart in banking technology. Mr. Gopala Raman Padmanabhan is a postgraduate in economics from Kerala University and has a master's in business administration from the Birmingham Business School, having a career span of more than 35 years with the Reserve Bank of India in various capacities. Mr. Padmanabhan has served in various responsible roles, such as a chairman of committee implementing GIRO, e-treasury systems, operationalization of ISO 2022 standards, and digitization of payment transactions. He is also the chairman of Tech Committee on Services for Exports and a part of Think Tank to manage the market volatility. He is a member of Governing Council for Management and Research and has been part of various working groups for development of banking systems. Mr. Padmanabhan is a keen sportsman and has represented his university in college days. We welcome you, sir. Kindly address the gathering.
It's always a pleasure to come back to this beautiful state. And having reached my room yesterday night and had some time in the morning, so took the occasion to go through the kit that your student representative had kindly handed over to me. And after reading that, I must say that I feel completely humbled standing standing in a campus which is the outcome of years of persuasion and perseverance by a great man, Dr. Samantha. I think for some reason when I was reading this, I was relating to a novel that we had as a part of English literature in our school, which is Far from the Madding Crowd, and that if you adapt that bit, it's a far from the madding crowd's ignoble strife. His sober wishes never learned to stray, and along the cool sequestered veil of life, he kept the noiseless tenor, and the result is for all of you to see. I think I'm truly humbled, and I think it is indeed great. It's always a pleasure to come back to an educational institution for prima facie two reasons. You feel younger, and secondly, most of you care a damn about who I am. Now, there is another reason as far as I am concerned. My father, who himself was a professor, after his retirement had spent his entire time till his last day in building up the Bharatiya Vidya Bhavan school in Trivandrum from scratch. I have seen that school with 17 students, and when he died, it was one of the leading schools in Trivandrum with more than 5,000 students. So since I was with him, with family, for a brief while when I was posted in Trivandrum, I know the enormous efforts and coordination required to build up any educational institution of repute and sustain high standards that makes every student proud of his or her alma mater. I think this institute has acquired this awesome reputation, and congratulations to one and all associated with this B school and its administration. After spending the best of years in the financial sector, that too as a central banker, you suddenly started having self-doubts as to whether you can speak on anything except finance or to anybody except the bankers. Incidentally, this is the constant complaint from my family as well. Now, having agreed to the call from my good friend Dasarathi, who unfortunately could not be here, probably because I suspect he failed to lure a better speaker. Now, I cannot speak. I cannot refuse to speak, particularly having driven technology and payment systems for long years in the Reserve Bank of India. Now, I start off by making the statement that India is at a critical point in its history because India is becoming digital. Digital has become a priority for companies across sectors, and increasingly, there is an emergence of integrated economy that transcends traditional industry boundaries. Demonetization of the government drive is fast transforming India into a digital power. If you have happened to come across a report by McKinsey and Company, Mastering New Realities, Blueprints to Transform Indian Banking, I think they flagged two major trends on the supply and demand side that are converging to drive a major transition. Namely, surge in the digital adoption on the supply side and shift in customer expectations and behaviors on the demand side. Now, India has nearly 500 million internet users, with 80% of the traffic going through mobile devices. Geo disruption was a real disruption because it led to enormous reduction in data costs. This has a major implication along with the access to digital assets like Aadhaar and UPI. On the demand side, the Indian customers are becoming more demanding, and according to the report, these changes could trigger emergence in 12 large ecosystems in India, like transportation, travel and hospitality, mobility, housing, digital content, education, health, public services, wealth and protection on the retail side, and B2C, B2B marketplaces, B2B services, and global corporate services on the institutional side. Now, in the emerging scenario that I just flagged, what is the new normal for 2018 or future as far as the financial sector is concerned? According to a fintech report which came out, it's a transformation of a rather homogeneous, somewhat staid marketplace into a dynamic milieu of bar-raising specialists. In fact, today morning we were discussing that this change is evident even in the dress code. I represent the traditional dress where you come always, bankers come in suits, and today's bankers come in jeans, t-shirt and an overcoat over that. Now, at the core of this transformation is the customer-centric innovations in a bid to exceed their expectations of personalized services that's being taken for granted by the modern-day customers of financial services. While what triggered this transformation may be a global financial crisis of 2008, this is more a process that is playing out rather than a set of events. This calls for a new strategy on the part of the traditional players with a basic question: do they compete or do they collaborate? Now let's look into how fintechs are redefining the landscape. The financial services industry is being reshaped by the expanding customer expectations, I said, for convenience and personalization driven by a bar set by big tech firms, often known as GAFA, Google, Amazon, Facebook, and the Apple. These fintech firms are earning a reputation for customer centricity by bridging the gap between what financial service firms currently offer versus what today's customers want. In fact, it's interesting to tell an example that when our deputy governor, the former deputy governor of the Reserve Bank, Subir Gokran, made a research, he found that the financial inclusion in this country was getting into problems, was not getting the expected results for the simple reason that the banks offered what they had to offer rather than offer what the customers want. Now, so in today's scenario, these companies basically use 4 key principles as the foundation to build differentiated customer experiences. Personalization, quick response, which is speed, relevance, and seamless delivery. As a result of this, fintechs and big tech firms have created a paradigm shift in customer experience that eliminates multiple pain points across the customer. Now, infrastructure-based technology through platformification and open app APIs is reshaping the future of financial services industry, while the operational advancements offered by robotic process automation, RPA or chatbots, or distributed ledger technology, we can never get away from that, are enabling greater agility, efficiency, and accuracy. Today, innovation with a central focus on the customer is vital for survival and growth. Now, customer focus means empathy with the customer, earning trust, simplifying the customer experience, and aligning with customer goals and expectations. Now, the advantage that the fintech has is their agility, but the disadvantage they have is that they don't have the kind of outlets or distributive skills. So whether the formal financial sector and the fintech can cooperate is the issue that we need to debate. Now let me take up the specific question, how is the banking sector changing on account of fintech? As technology adoption deepens in the financial sector, the key issues to be understood here are, which actor manages the customer relationship or interface? And which actor ultimately provides the services and, more importantly, assumes risk? The rise of fintech innovation has also resulted in what some have dubbed as the battle for customer relationship and, more importantly, customer data. Data is money today. These big firms are not coming to India for the sake of offering services. They are coming to India for the sake of data, because data is money. And this gives you some idea about the recent changes in what the government and the Reserve Bank brought about as far as the data localization issues are concerned. The second question concerns who will be primarily responsible for what may be seen as traditional core banking services, such as lending, deposit taking, and payment and investment services. Now, the Financial Times did a recent survey and concluded that the financial sector across the world have adopted 5 different approaches. Let me try to flag that. One, they call them as digital attackers. This group, who have the skill, staff, and technical capabilities, set up their own digital banks. Classic example, DigiBank of the Development Bank of Singapore. Similarly, Goldman Sachs launched a consumer digital saving and lending operation about 2 years ago. Second, acquisitions. This strategy is adopted as banks often find it easier to buy or invest in a startup that has built up a digital platform instead of doing this from scratch. There are some Spanish and the US banks who have adopted this strategy. Third, partnership. Sometimes banks choose to partner big tech groups. In Asia, Standard Chartered Bank has teamed up with Alipay to launch a digital remittance service. And they too have again combined and teamed up with GCash in Philippines. Diversification is the fourth strategy. While their core payments and lending businesses may be under pressure from digital competitors, some banks are using new technologies to move into new markets. And examples of banks that have followed this route are the Royal Bank of Canada or the Barclays in UK. And finally, if you can't beat them, join them. Sometimes banks decide that the threat from digital competition is so great that they just have to amend their business models. This is happening again across the world. Now, what is important to realize is that this situation poses challenges for the regulators also. There has been an explosion of technology providers, particularly after 2008, and they have started delivering financial products directly to businesses and general public. Earlier, regulators had been adopting a wait-and-watch policy as it was perceived that the preemptive regulation often scuttles innovation. The question is, will the same approach work in today's scenario? Regulation did nothing about peer-to-peer for a long time in India. Regulation did nothing about cryptocurrencies for a long time in India. And finally, when the regulations came, it proved to be more disruptive than being enabling. So this is the question that the regulators will have to take a call: what to regulate, how to regulate, when to regulate, and whom to regulate. And this has to be decided up front. So the point that I'm making is that when technology pervades into the financial sector, the regulations will have to become more and more principle-based rather than product-based. And this becomes very critical. If it doesn't, what happens? Let me just take the case of cryptocurrencies. In cryptocurrency, for a long time, the regulation never came because to Reserve Bank, the Bitcoin or the cryptocurrency was a commodity which should be regulated by SEBI. And to SEBI, this is a currency which should be regulated by the Reserve Bank. So I went on to the TV once and said that this battle between the regulators reminds me of my home state, where on the river beds there are these police stations. Now what happens in this scenario is that once in a while a dead body comes floating, it gets caught in a weed in front of the police station, and the dead body becomes the responsibility of that police station. So what did the police station do? Each of them used to have a long stick with which they will poke at the dead body, so the dead body flows and goes to the next police station. Now this became the basis for the regulation, and when regulation came, it was a complete ban. It begs the question, when the underlying commodity or the underlying asset is not declared illegal, how do we stop anybody from using the money that you have, not a credit line, the money that you have for the purpose that you want to use it for? Now this is a question. Now let me move away from that and turn to a more interesting area which affects everyone's life, which is the payment systems. Now let me start by making three statements. One, we have one of the most advanced retail payment systems in the world, irrespective of what you hear otherwise. Celebrate it. I did. When an official from the Australian embassy met me in the Reserve Bank some time ago and considered that he feels a lot easier, confident and safe doing an electronic payment transactions in India vis-a-vis his own country. In fact, I was standing, the other incident that I want to share with you is I was standing before an ATM near my house where a manual labor went in. He tried to withdraw the money and he came out looking very disturbed. He said, what happened? His friend was asking. He says, the transaction went through, but I didn't receive the money. So I don't know whether my account is debited. The next question is important. So his friend again, a manual labor, asked him, वो मोबाइल में कुछ मैसेज मिला क्या? He said, no, कुछ नहीं होगा. So that's the confidence. That is where as a policy maker you feel very happy that what you have done, there is a confidence in the people that nothing can go wrong. And this is the safety and security that we need to think about when we talk about digital transactions. Now the third point, which is related to the point I just made, is the statement I want to make that central bankers as a class are born to worry. They worry when nothing happens. They worry when too much happens. So one of the reasons why I worried when I was a central banker was when I gave this card to a petrol bunk or a hotel and my card got taken away by the waiter or the person, I never knew what all details he was taking from that card. So then we thought about the second factor authentication, and today probably India has the lowest fraud rate as far as card not present transactions are concerned. Now, it must be also understood that the payment system revolution in India is a silent revolution, and payment system, they always say, is like the plumbing system. Now, as long as the plumbing system works, nobody notices. But if the plumbing system chokes, then it raises a stink which becomes unbearable for you to. So the payment system is important is to make sure that it works and it works efficiently and silently. Now, how many of you can imagine if we did not have an electronic payment system or ATM, how would have been the outcome of or the problems that the public faced on account of the first few days of demonetization? It would have been impossible. So the final point I make on this is that please don't go back under the assumption, because if somebody had to leave this country for 10 years and come back and read the newspapers and the TV, people would think that digitization in this country started after demonetization. No, it is not so. It has been there, it has been carefully planned. What demonetization ensured that people who had an alternative, who did not use it, were still having cash. When they did not have that cash, they moved to the digital. And once they were comfortable with the digital, more people started moving into digital. That clearly has happened. But it is a misnomer to think that digitization happened in this country only because of demonetization. And you know, there are several types of payment, retail payment system. I am not going into the details, but I think, as somebody said, the WhatsApp movement of the Indian retail payment system is the UPI. Now, a UPI type of payment system is something which I don't think any country has, and many countries are trying to mimic. I just quote from the former RBI Governor, Dr. Rajan, when he was inaugurating the UPI, who said, for a number of years, we have been saying that we need a revolution in banking in India. I think we can confidently say the revolution is upon us. What we have in India is the most sophisticated public payment infrastructure in the world. That's important. The most important word is the public payment infrastructure in the world. Now, there is another thing which is silently developing, which is called the Bharat bill payment, where the bill payment itself becomes ubiquitous and interoperable. Once it takes on, that's another major revolution that is happening. Now, as far as the Indian capital market is concerned, moving away from the Reserve Bank side, it is the toast of the world, the most open among all markets in India, and its settlement systems are among the best in the world, all enabled by technology. Now, today, technology has also changed the way that one can access low-value credit, which is the peer-to-peer lending. Now, peer-to-peer lending, use of technology, the UPI and Aadhaar-based infrastructure are the changes which are going to make the financial inclusion a completely different story as far as India is concerned. Now, fintech nevertheless has massive potential to serve financially underserved populations by providing customizations at scale and reducing cost to serve. Yet, fintech offerings remain primarily accessible to the elite India and relatively well-off customers in Tier 1 and Tier 2 cities. This is where I think the cities like Bhubaneswar and the kind of initiatives that have been taking, this is real inclusion, as somebody said, in terms of starting with education. So in October last year, when I was at a seminar in Tokyo, a panel discussion which discussed the issues of fintech and how regulators are moving in different jurisdictions. It was interesting to note that, led by UK and Singapore, an enormous amount of work is happening in the use of blockchain for payments. Now, blockchain is a potential game changer as far as financial inclusion is concerned and the trade financing is concerned. But the problem today is that the blockchain is being thought together with Bitcoin. Whether Bitcoin is good or bad, please understand the DLT and the blockchain technology must be here to stay. And unless this is adopted very quickly, India will be losing ground in relation to the other countries. Now, the technology is also being used, as far as the regulations is concerned, or what is called the RegTech, technology in regulation, where most of the transactions the regulator will be able to see on a real-time basis, which will make regulations qualitatively much better. One thing that the regulators need to be conscious about, as far as a technology-led financial sector is concerned, is that scaling up happens so quickly that what is once too small to care will very soon become too large to ignore. And once it becomes too large to ignore, controlling that is going to be very difficult. Now let me sum up. What I have tried to convey is that world over, technology has changed the way traditional financial institutions work. Simultaneously, regulations are being relooked so as to maximize the economic welfare by benefiting business and society. It is now recognized that for achieving this, regulation must be principle or risk-based rather than product-based, should be proportionate, and should be consultative and agile. India has also achieved a lot and moved on along the paths of liberalization. Technology has enabled efficiency in many areas, but how can regulatory architecture be reimagined to facilitate innovation and the ease of doing business? Now, although the regulations could become more consultative, we could also consider or add an appellate mechanism in respect of the decisions which affect the entities that are not banks and more generally commercial or non-regulated entities. Now, this principle will have to be adopted irrespective of whether the payment system regulation remains with the Reserve Bank of India or it is taken out of the Reserve Bank of India as the debate is going on. So from the foregoing, it is amply clear that the juggernaut of technological innovation is unstoppable and impacts every sphere of modern and increasingly complex life. I also realize that most of or each of what I flagged is going to be a point for either the panel discussion or subsequent discussions that the experts are going to have with students. That said, technological innovations are not unmixed blessings, as they do have unintended side effects. One example of Sweden, I think Mr. Bajpai already flagged, but there is a famous quote from Harari in his book Homo Deus, containing the insights into the future society, who says, as we accumulate more data and increase our computing power, events become wilder and more unexpected. The more we know, the less we can predict. This brings to the fore the issue of security of financial transactions that should be paramount as we embrace technology. However, it needs to be appreciated that ensuring a safe and robust financial sector cannot be the effort of an individual or a single organization. It's a big stage like a huge opera. Perfect coordination is called for to achieve a successful outcome. This is because the concept of financial sector itself has undergone a complete makeover. Banks, financial institutions, payment system providers, non-banking financial institutions, primary dealers, stock exchanges, mutual funds, etc., 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 are now all a part of the financial sector. So an attack in any one part of the sector can possibly have a domino effect. Finally, it is often said that we live in interesting times. But just as we look for technology for better delivery of services and driving down cost, we need to balance the customer convenience with security. As I said, we are dealing with global players when it comes to ensuring security of our critical assets and data. While regulations will have to be enablers, we also will have to provide for safe use of technology as technology gets all pervasive. These are my thoughts. I hope you have a wonderful day of discussions. Once again, thank you very much for inviting me.
Thank you, sir, for your insightful address. Now I call our second keynote speaker, Dr. Subhashish Gangopadhyay, Research Director, India Development Foundation. Dr. Subhashish Gangopadhyay is a PhD in economics from Cornell University, USA. In a career span of more than 35 years, he served various organizations such as Indian Statistical Institute, served as a founder director of IDF, an independent and self-finance research organization, and then later appointed as advisor to the Finance Minister, Government of India. He has lectured widely to the foreign industry delegations coming to India. Currently, he is a member on Committee on Use of Defense Land, Chair Professor of Emerging Marketing Finance in the University of Groningen, Netherlands, and Visiting Professor in the University of Gothenburg, Sweden. He has published widely in international journals and has a number of books in economics and finance. His current research areas covers policy, finance, law, economics of patent, concurrent monitoring and evaluation of non-market interventions. For his contribution, he is awarded with honorary doctorate by University of Gothenburg, Sweden in October 2006. He holds the prestigious Maston Guest Professorship and Bertil Danielson Guest Professorship in 2008. We welcome you, sir. Kindly address the gathering.
Thank you very much. In 2010, I had occasion to research institutions in India. And everywhere I looked, KIIT kept coming up. And I wondered that why is it that it took me, who is in academia in India, took me till 2010 and a deliberate search to find out about KIIT. Because I felt that this was an institution that we should all be talking about. So I talked to many people about this institution, but we academics never spend our own money to do anything. So I never came here. But when the opportunity was given to me, I jumped at it. Because seriously, I have always wanted to come and see this place. Not only I met many people and I met a few students last night, I must say that I was quite impressed with the maturity and the easygoing sociability of the students, which, as you know, in India is a big thing because most of us, thanks to the IT revolution in India, have become nerds. We don't talk. We are incapable of communicating. So that was quite a pleasant surprise for me. I enjoyed that. And today I hope I will be able to re-educate myself on many issues, right? Because I saw the agenda. The next thing I want to say is that when I looked into the agenda and I found that I was being preceded by a banker, I knew I was in trouble. It's extremely difficult for an academic, to talk about the real life after somebody in real life is going to make a presentation, right? And Mr. Padmanabhan has indeed covered most of the things that are going to happen. So what I will do, and this is called planning in advance, so I had presumed that this is going to happen, and therefore I had prepared a discussion which is slightly hatke, right? So I'll try and see if I'm able to keep your interest in this session. So the title of what I'm going to talk is indeed Future of Work, because that is the title of the conclave. But the first thing I want to tell you is how to avoid panic. Because if you look at much of what is being written, much of what is being said, right, everybody is putting the fear of God or whoever into the hearts and minds of young people. There are no jobs. No jobs are getting created. Machines are going to take over everything. What are people going to do, etc., right? So the first thing I want, since there are a lot of young students over here who are going to go out into the world this year or next year, so I want to assure them that nothing is lost. This is what we old people do. So you don't have to worry about it, right? Do not listen to us for once. And why do I say that? I say that because let's do a thought experiment. Suppose there are 3 sectors, A, B, and C, and they're employing 1 million people, right? And you suddenly find that activity levels in each of these sectors is shrinking. So immediately newspapers, McKinsey, right, they all start writing, jobs are drying up, right, jobless growth, etc. So there are no jobs indeed in these sectors. But the question to ask, and that is what the history of civilization tells us, the question to ask is, why are these jobs shrinking? Rather than whether they are shrinking or not, if you know they are shrinking, the immediate question is, why are they shrinking? Not therefore, oh my God, what will happen? But why are they shrinking? And you will find that they are shrinking because society has changed preferences. Society has changed their wants. But you always change to something. You don't suddenly say, okay, today from now on I'm not going to eat anymore. You don't say that, right? And remember, people have changed their preferences on food. Before, the more you ate, the better you were. Now, the less you eat, the better you are. Has therefore the restaurant business gone down? No, it hasn't. Right? So people change, transformations happen. So we want something else. So the question to ask is, where are the new jobs coming up? So the moment you get the signal that certain jobs are going down, you know that when you're training yourself for a career, those are the areas you don't want to focus on. That's the only information you need to have to be able to act on. So you ask yourself, where are the new jobs coming up? Are the nature of the new jobs different from the old? Right? And that is where I think the current generation has, the current young generation has to worry about, which is what skills do you need to be able to address or approach or get involved with these new activities that are coming up. And what Mr. Padmanabhan said was an idea of how businesses are changing, and hence the type of activities, the type of training, type of skill that people need in the current generations will have to prepare themselves for. So let's look at technology and jobs. Like this, it's very easy to be theoretical, and I'm not a motivational or an inspirational speaker, so I have to get down to data, right? I have to be able to tell you why I made that first slide on jobs and why I'm asking you to avoid panic. So let's look at what has happened over the years. Now this is, I'm going to quote extensively from a Deloitte study, which was done for the UK, but I've checked the data myself. You know, unlike in India, we talk about big data, IT revolution and all of that, we still are the most data-starved country in the world. We have no concept of why data is to be used, or what data we need, or what data we need to look at. We have no concept. So, you know, this I could not do with the Indian census data, so I'm going to do with the UK census data. So what does this data say? Or what are the conclusions of this study? That technology increases income. That's known, right? For some people at least. Maybe it also includes disparity. But in the aggregate, it increases income. Who gets it is the second question. Right? And higher spending power generates new and more wants. So if you have new wants, new preferences, then obviously new jobs will be created because those preferences have to be addressed. So dominant trend has been of shrinking agricultural jobs. So the first thing we see with the Industrial Revolution was the shrinking of agricultural jobs, right? Now, today is 2018. It is interesting that exactly 100 years ago, right, Dr. B.R. Ambedkar wrote a piece where he said that India is going to suffer if we don't reduce the number of people associated with agriculture. And what he did was, he took examples of European countries at that time, and European countries about 25, 30 years before. And he showed how within that 30, 35 years, these European countries have drastically reduced their people in agriculture and increased their people in those days in manufacturing. Services was not the done thing in those days. Now this continues even today, right? So shrinking agricultural jobs and rapid growth in, over this period that one is talking about since 1871, caring, creative, technology and business services. Now these were not there, say in the 1940s and 50s as major sectors. But with technology, these have now become extremely important job creators. So let's look at the types of jobs that are coming up. We are told that machines will be doing the repetitive tasks. And this has been happening forever. Right? This has been happening forever. Many of the jobs that people used to do before have been done by machines long before today. Skills as we know today will become redundant. And as an example, think about the artisans after the Industrial Revolution. Right? So all the nice things, handlooms and handicrafts that was made India one of the leading countries in the world prior to the Industrial Revolution in terms of GDP and growth, right? All of that vanished with the advent of the Industrial Revolution. Does it mean that people were therefore starving and not without jobs? Of course, we can cry for the artisans, right? But the fact of the matter is, new manufacturing jobs were created after mass production started. There is a saying about men, right? We are all adults here, so I can tell this story. That there is a lot of discussion among anthropologists, right? That really for the sustenance of human beings, you don't need these many men, right? You need only a few men. Lots of women, of course, but a few men. Unfortunately, civilization has not been getting rid of men. So what do? They go out and fight wars. So this is what anthropologists say, that in many tribal societies, these are the beliefs. Now, if you recall in history, men were for muscle power, right? And over time, there has been shrinking demand for muscle power. We are still around. Too many of us maybe, but we are still around. Because there is increasing demand for other human attributes that men, if you dig hard enough, you may be able to find, right? So for example, when agriculture came, and before that there was hunting, and with hunting we discovered tools, right? And then we got a gun, right? So when hunting, gun, why do you need men anymore with muscle power, right? Get the gun. So retire the men. But then what happened? Men said, hey, livestock business. Hunting is no longer important, but we can start an entirely new activity, and thus came the livestock business. I'm telling you a story. This is the narrative, right? This is not exactly what happened. Guns were discovered well after livestock business started. But I'm just telling you that how things get substituted, right? And we look back at history. The problem is that whenever we try to look into the future, I was excited to hear Mr. Padmanabhan say that it will be difficult to predict. Because as an economist, let me tell you, it's dangerous to predict, right? We know that better than anybody else. So I'm happy that now technology prevents us from predicting. What we do invariably is we look at the old data and then we do linear extrapolation. When societies are transforming, when they are changing, there are structural shifts happening. That's a dangerous way to go, right? Because we know the models are no longer valid. There is no longer, linearization possible. Things are becoming non-linear, structure is changing, etc. So we have to sit back and think, rather than be mechanical and use the data. Okay, so now I'll give you some facts about the UK, some actual facts that can be collected from the data. In 1871, the first one that I said about agriculture, in 1871, 6.6% were agricultural laborers. Today, that is this today meaning 2011, right? 2011, 0.2%. 0.2% are agricultural laborers. In 1901, population of England and Wales was 32.5 million, right? They lost a lot of good men in the two wars. So 200,000 were involved in washing clothes. 32.5 million, 200,000 were involved in washing clothes. In 2011, the population was only 56.1 million. As I said, they lost a lot of good men during the wars. And out of this 56.1 million, only 35,000 were involved in washing clothes. So labor switches from providing raw power and drudgery, right? So now I'm generalizing, not just to men. Labor switches from providing raw power and drudgery to care, education, and provision of services to others. If you look at how the world has been changing since IT, many of these things have now become possible because of IT, because of platforms. Because now information no longer flows vertically up and down in channels. Now information radiates out, right? 360 degrees. Anybody can access that information and hence can plan and design activities. And the example, again, Mr. Padmanabhan was from Kerala, so this is a good example to give. When there were these groups of very young, fresh graduates from technical institutions who got together and created this robot, which is to be used to go down and clean manholes. Now, seriously, come to think about it, if today, for that reason, all the manual cleaners of manholes, our jobs are gone. I think that's good their jobs are gone. Now you can train them to become Infosys players, right? That's what we should be thinking. Rather than saying, oh, jobs are gone, let them go back and clean manholes. Right? And that is what is happening. Many of the jobs that are going away are jobs that we wouldn't want our children to do. Right? So that's good. And I was quite surprised that the one thing that happened was that the Chief Minister announced that from now on, we are going to use only these robots, will not allow human beings to enter manholes, and as a result, companies started developing the prototypes better, and that's how technology and growth happens. Between 92 and 2014, so roughly about 2 to 3 decades, right? 2.5 decades. 909% increase in nursing auxiliaries and assistants. 580%, I can't see very well, 580% rise in teaching and educational support assistance, power to us. 183% rise in welfare, housing, youth and community jobs. So this is in 2.5 decades. 168% rise in care workers and home cares. And what were the drops? 79% drops in weavers and knitters. Now, I must tell you this story. I was at a sociology conference, and you know, we in India, especially people who are in the social sciences, we cry a lot. We feel really bad for the poor in India, so we end up crying. Not that we do much, but we end up crying. And then we say that the government must be doing something. So there was this program going on, and everybody was talking about the weaving community in a certain part of India. And so I couldn't take it after some time, so I asked that when we are talking about this weaving community, I want to ask 2 questions, and if the answer is in the affirmative to both, then I think the government should be spending some money for the weaving community in this particular part of the country. So my questions were, when in recorded history, not anecdotal, but when in recorded history, were the weavers at the top of the social hierarchy? And second, if we help the weavers, will their kids be sitting with our kids in an air-conditioned room like this and discussing the future of some other community? If you say yes to both of these, I think the government should spend some money for this weaving community. That's a job nobody wants to do. And if that job is going down, it's okay. We need not cry about it. 57% drop in typists. And finally, 50% drop in company secretaries. So that's how jobs are shifting, right, from one type to the other type. What is important, therefore, is in the nature of jobs. Right? So what is the nature of jobs? Knowledge intensive. Right? Because as, you know, what is happening if we sit back? Uberization, as they say. We have Airbnb and all of that coming up. And all of this is made possible because of platforms that have been generated by IT. Now, what does this mean? This means we are no longer talking about bricks and mortar establishments, etc., etc. Think about a taxi company, right? In India, we have no taxi companies, but in many parts of the world, we had taxi companies. Right? And even in Delhi, there were local taxi companies. So there was a taxi stand, right, where all the taxis were, and you could not catch a taxi on this road. You could not flag down a taxi. You had to get the taxi from the stand. And in many parts of the world, that's the way it goes, right? Though those companies are bigger. For us, transportation was reserved for the small-scale sector, so we never had taxi companies of that size for the entire city. So anyway, now these taxi companies, there was a guy who was running the stand who actually provided the capital, right, with which the taxis were there, and more or less they would be trading, you know, loans, etc., from the person who ran the taxi stand. Today what is happening is that I can, you know, I have a car, I've taken a 3-month vacation, I want to work 4 hours a day, I don't want to work 8 hours a day, I want to drive my Uber for 4 hours every day. I can do that, right? Uber is now the company, but Uber is not giving me any tools. It's no longer a capitalistic enterprise. I bring in my capital, my car, right? I take the risk. So everything that we know about capitalism is no longer valid in either Airbnb or in Uber. And this organizational change means a completely different way of looking at things, Jobs take on a new meaning because these taxi drivers, really, Uber taxi drivers, are really not doing a job. They're entrepreneurs, right? They're taking the risk, they're putting in their own capital. What more do you need, right? And Uber is a platform, right? It's exactly like the road on which the taxis used to run before. So that's what is happening. And because this is happening, any extrapolation from the type of jobs that we had before would be counterproductive in understanding what is happening. So medicine, education and professional services at I'm repeating myself, but let's look at 1871, 9,832 accountants in England and Wales. In 2011, 215,678. Power to the business schools. Yes, we need more accountants. 1871, one hairdresser for every 1,793 people. 2011, one hairdresser for every 287 people. With even less hair. Yeah, with even less hair. Now, while I was coming here on the road, I just saw a big sign of Habib, right? Why would you want to do any other work if you can be Habib, right? So these are the new professions that are opening up. Between 1950 and 2011, number of traditional bars declined. Not good. Number of traditional bars declined. Very bad. But people employed in bars. I would love to be employed in a bar. Think about it. I was talking to a person who is no longer bartending, but he was a bartender. And he said that his last drink that he made, he used to work in shifts. So when his shift was getting over, right, he spoke to the owner and made a deal that the last drink he makes, he will make one for himself. Right? Free. I'd love to work in a bar of this type. So, the last thing I want to say is, and this I'm saying because Mr. Padmanabhan talked about regulation, indeed that is something that we need to think about a lot, because that's the new area that is opening up. The whole economy is transforming. I mentioned Airbnb. I'm staying in a hotel, right? And thank you for that. It's a very nice hotel. So suppose I fall down the stairs of the hotel. I don't have to worry. Why? Because the hotel has insurance. Or KIIT is going to take care of me, right? But the hotel has insurance. But in an Airbnb, if I fall down the stairs, who has insurance? We need an entire set of regulation. We need an entire set of new markets to be able to handle these issues, right? We need to know what is efficient. We make establishments buy insurance for their clients simply because economists had figured out and worked out and made models and all of that to say that that is an efficient form of regulation. Now things are going to change, right? So economists, lawyers, they need to get together and they need to come up with new regulations. And to give you an example, let me ask you a question. Trivago, right? Trivago, you know, you look for hotels and all of that. The question is, people believe that because of Trivago, competition in the hotel industry has gone up. There are many who say it has actually gone down. So let us understand why this is being said. There's an actual case. There is a, there is a place off New York, an island called Martha's Vineyard, where, people like Ambanis of the US go for vacation. So there's a very exclusive island. And this island, there are about 4 or 5 what they call gas stations, what we will call petrol stations, right? So there are 4 or 5 petrol dispensing stations. They are all, opposite each other. So 4 or 5 of them in one cluster. So somebody filed a suit saying that the prices of gasoline, right, in Martha's Vineyard is way above the prices on the mainland. Right? And cost of transportation cannot account for this difference, number one. Number two, all the gasoline stations charge the same prices. So it went to court. The court said that, and the economists argued there's enough evidence that there is price fixing going on, but we can't do anything. Now what was happening is very simple. Now in our modern petrol stations also you see these prices put up, but in abroad all the gas stations put up their prices, so when you're driving by you can see, right? Big billboards with prices, electronic billboards. So now the reason why competition works is that what do? You're charging a price, I charge a slightly lower price, right? Even before you know it, your customers have come to me, right? And I've taken away your customers and made a huge profit. At a little bit lower price, but large volume. That is how I make gain, and that is what competition allows you to do. But with the digital platform, that time is now an instant of time. I can put in a flag on my software such that every time you reduce the price, immediately ping, or I can write the software, follow the price. So you reduce price, everybody's prices comes down. And therefore you have no reason to compete. And that is what the courts were saying about Martha's Vineyard. Right? Since all the gas stations were in a cluster, they were looking at each other, and therefore they could easily keep prices up. Because everybody knows that if I reduce prices, so will everybody else, it doesn't help me. Because even before the next car comes, everybody's price is down. So this instant pricing is no longer sure that that's the best thing for competition. And hence, regulatory, Competition Commission of India have to re-look at everything that they have been following all this time. I think India has a great opportunity because up till now, India has never been thinking on its own. Right? We've always said, but Burkina Faso has done this, so let us do this. Right? That has been our usual approach. If you recall, in the 60s, we said Japan was the path to follow. In the 70s, South Korea was the path to follow. In the 80s, East Asia. And since the 90s, we have become a bit stagnant. We are still trying to follow China. Now, the fact of the matter is none of these countries followed anybody. We tried to follow each and every one of them and failed miserably. Those countries have gone way ahead of us. So now the opportunity has come for us to think on our own. Because everything in the world is changing, there is nothing we can fall back on that is happening in other countries. And that, to me, is a phenomenal opportunity that India has today. I'll stop there. Thank you.
Thank you, sir. That was a very enlightening address marking the start of the 9th National Finance Conclave. I request Professor Anil Bajpai to please felicitate our keynote speakers with a token of our appreciation.